Welcome to the KOSEC Show. Join the KOSEC KODARI Securities team as they share their insights on the Australian share market, discussing some of their best performing companies, macroeconomic news from offshore, including local domestic news, foreign exchange, as well as commodities. If you have any questions regarding the share market, our phone lines are open. You can dial in on 1300 854 151 or alternatively email info@kosec.com.au. Exclusively on this show, each guest will reveal their hottest stock pick. For more information on any of the topics discussed, go to kosec.com.au. The information featured in this program is general in nature and does not take into account your personal circumstances, needs, or objectives. Guests appearing on the program may own or have commercial arrangements with some of the companies mentioned. Before making any investment insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Good afternoon, investors. My name is Will Brownlee, and welcome to the KOSEC Show, where we discuss all things relevant in the market this week. Macroeconomic data, currencies and commodities, top performers for the week that was, and of course, our hottest stock picks for the week to come. As always, before I go any further, allow me to introduce you my panel of experts and resident experts on the market. To my left, the ever wonderful Caroline Wong. Back as always, the ever stoic Gabriel Ryan. And of course, the ever mystic Mr. Louis Mossman. Welcome, ladies and gents.
Will.
It's been a interesting week. It's been a bit of a bullish week. Things have been sort of moving in a positive direction. How's everyone been feeling this week? We all in fine spirits?
Yeah, well, I think our emotions follow the market, so we're all feeling pretty good.
Well, it's good because I imagine there's some people that have been affected by those floods, which are not looking so good at the moment. I mean, that is absolutely horrific. We're really getting a rough time of it, haven't we? We've got fires last year.
Yep.
We had COVID later that year. So last year we had fires, then we had COVID. Now we've got floods. What on earth is going on?
Signs of the end times, Will.
Signs of the end times. Don't say that too much, mate. But the market, on the other hand, has been moving in a positive direction quite nicely. We have been going up. Are we up for the week, Caroline? We're up. Have we got
1.5%?
1.5% for the week. That's very, very good. What's the US? Is that up as well, or?
US?
Yeah.
Yeah, it's up.
Okay, so
But
everything.
not its all-time high. So.
Okay, perfect. So everything sort of, any big sort of news topics that we're sort of going to be discussing throughout today? I mean, obviously, this is a jam-packed podcast. I mean, please stick around right to the very end because this is really a jam-packed podcast. We've got a lot of stuff to unpack and a lot of stuff to discuss. We're going to start off with the vaccination rollout. Caroline, I'm going to jump straight over to yourself. When can I get my injection? I want to go on holiday.
Oh, that depends on how old you are. So
Oh, okay. All right.
You're
I'm not
below
going to tell people how old I am, but yeah.
Okay, I don't have a chart this week, but I do have a picture of a global map. So it's going to test our geographic skills. If we pull up the picture, we can see that there are different shades of green. So the darker shades actually just mean that more doses have been administered. So globally, more than 500 million doses have been administered. So that's across 140 countries. What is immediately apparent is that the dark green, it's US. So
And
more
Chile. Is that
Really?
Chile?
Chile, yeah.
Yeah,
Chile's up there as
Why
well.
is Chile up there so much? Jeepers. Why have they been vaccinated so heavily?
Cold over there.
Cold.
Well, I think Chile is one of the more developed South American economies, so they probably have better infrastructure.
I love that. We all came up with silly answers. Gabe always ever start. Gabe comes in there with a more realistic answer. And what's that big one above? It's in America, just underneath Alaska. Was that somewhere in Canada? That big.
I
I think
think
that's
so.
part of Alaska as well.
That's part of Alaska. So that must be
sails down the
Vancouver,
coast.
roughly Vancouver, or
No, Vancouver's in Canada, isn't it?
no? Yes.
Yes, Vancouver's in Canada.
Good
I
thing
think
we're
the
in
biggest
finance
one,
and not.
I think
in-
number one, Caroline will have something to say about because their stats are pretty remarkable.
Oh,
the
yes.
biggest.
So US, we have actually had 133 million doses. So that's in line with President Biden's goal of more than 100 million vaccines. If you look at the center, so like that dark green dot in the center of the picture, that's Maldives. So 227,000 doses have been administered. That covers about 30% of the population. And just towards the bottom right-hand corner of that picture, you can see Australia. 333,000 doses have been administered. That accounts about less than 1% of the total population. So we're getting there even though we are late. CSL, the locally manufactured vaccines, first batch of it has been approved for use on Tuesday. So that will hopefully help us get back onto track.
Perfect. So, I mean, well, obviously, any sort of news on how this, like, side effects? Are we getting away from all this blood clots? Is everything sort of starting to smooth back out again? Haven't
Yeah.
heard any news.
So I think Scott Morrison has gone ahead with it and said that I heard something like vaccines do not have a nationality or something like that. We'll just continue going.
Okay,
forward.
Yeah.
very, very good.
I think the biggest halt to the rollout is rising cases themselves, which
Yep.
reduces the mobility of people. So across Europe is one of the most populated regions of the world, along with Asia, of course. Vaccines haven't been rolled out as quickly as probably first intended, just for the pure fact that COVID cases have been going up. So I think European markets have been a little bit worried about that. It's impacted oil, most definitely. I know Gabs will have something to say about the Suez Canal. But yeah, I'd just like to bring up Israel. They're actually number one on global COVID
Yep.
vaccination vaccinations. They've administered 50% of their population
Wow.
with fully dosed
That's-
with the vaccination. So they're the by far
Fully dosed, like both of them, or just one vaccination, just one.
fully, whether it was one or two, fully.
Do you know
really?
which vaccine they're using?
Well, if it was
Not sure
one,
exactly.
it
I
must have
think
been. It must have been Johnson & Johnson.
I'm not too sure which one they've done, but 51%. The next best is, I'm going to butcher this name, but Seychelles. Have you heard of that before, Gabriel?
I don't know what's the spelling.
Seyche.
Seychelles.
Seychelles. That was terrible. But they've only done 32%, and that's number two. So Israel is far outperforming the rest of the world.
And we've done 1%. Oh,
We don't
Close
need
to
it.
one.
I think on Monday we'll be going no face masks on public transport, full attendance to all arenas, nightclubs, football
because we can
stadiums.
dance now. We can stand up in a
Exactly.
pub and we can dance. That's one of the greatest things. We can stand up and I'm going to stop getting big taps on the shoulder by big bouncers saying, "Oh, please sit down." Listen, while we've sort of been talking here, and I think earlier today we had a question that was asked in, and it kind of pertains to sort of, I think, a little bit about inflation. Let's go to that right now. Let's have a quick look at what that question is saying, because it does pertain to this a little bit. We've got that up on the screen.
I'm not sure if the producer has it there, but I think it was, I received the question personally myself.
Yep.
It was actually an email. I can't remember the client's name, but he was asking about inflation itself.
Yep,
And that's
okay.
a narrative we've been hearing a lot about over the last 2 weeks. So I did have a think about it, and I've got a few things to say, but essentially he was asking, is it something we should be worried about?
Yep.
Because
Well, is it something we should be worried about?
I suppose that's my answer. That's what I'm trying to
You
answer best I can. But he also asked what businesses, what stocks are best to go into, if we have that inflationary period that has been, talked about a lot over the recent weeks. I think rising COVID cases in Europe and what's been happening in the Suez Canal, which Gabe will cover, has kind of dampened the story about inflation and taken it away out of the news. But I do think it is something that seriously should be closely watched out for and considered in the coming months and years as well. Now, the main reason I say that is inflation is really dependent on people spending money.
Okay.
And that's not something we're having right now. Savings rates are at the highest levels they've been in over 10 years, and that's for individuals and businesses alike. So people aren't investing and spending their money as quickly as governments have intended, simply for the fact that we're in a period of time where people are probably a bit uncertain. So obviously, if you received a lot of JobKeeper payments, you're probably holding back a lot of that. You're not going out spending it at nightclubs, pubs, on new TVs, simply for the fact
Because you can't at the moment, of
you
course.
can't
Up
at the
until
moment.
recently.
Yeah, exactly. But also, people are a bit uncertain. They want to have that cash just in case anything happens. They lose their job. There's more rounds of COVID. So savings rates are high. We rely on spending for inflation to go up. So I want to bring up a chart of money supply. So money supply is obviously the total amount of money that's being pumped into the economy. Essentially, over the last 12 months, we've had two parties that are impacting this quite heavily. And as you can see, over the last 12 months, there has been an acceleration in the total money supply in the top major countries across the world. So first of all, we've got government stimulus, which is obviously governments borrowing money and distributing that through a variety of channels. And secondly, we've got monetary policy, which is central banks printing money, buying government bonds and other assets. So increasing the total money supply within. Now, if you don't know already how that causes inflation, I like to summarize it down into one simple statement. So essentially, if you've got more money and the same amount of goods and services, you've got more money competing for the same amount of goods and services.
right.
So obviously, prices are going to have to go up.
Yes.
Now, because people are saving more, savings rates are higher, technically, there's not more money demanding those goods and services for prices to go up. So once we get that economic recovery and people feel confident that the money that they've saved can be spent because they've got confidence in the future, that's when we'll see inflation. So it's dependent on a lot of factors.
Just to play a little bit of a contrarian play through there, is there some argument to be made that the world in general is becoming more uncertain? Like if we go back to the 1990s, I'm sure there was more and more people that were in jobs for a very, very long time. 80s, even more so than that. 70s, there were people that were in careers forever. A lot of people now say that in the 2000s, 2010 plus, more recently, it is not uncommon for people to switch careers 4 or 5 times. So this whole idea of going back and studying, this whole idea of upskilling and moving to a different role, different companies, different position is up there. So is there more uncertainty in the world in general? And will that play in?
Well, no, for sure. Like, the environment and the landscape that the world is in right now, and sectors are, developing rapidly, and we're advancing at a pace that's never been seen before in human history. And that's a fact that everyone's pretty well aware of.
Yeah.
So obviously that's the case. I think a bigger factor is and what's causing high savings rates is a high level of underemployment in Australia. So you've got unemployment, which is falling rapidly, and that's if you have a job, but underemployment, if you've got enough.
You want to work more.
You want to work more. So you're working, you've got a job, but you don't have enough to sustain and support your lifestyle. So obviously people, if they don't have enough, and if they're not, I suppose, they don't have not working enough hours, they've got a job, but they're not working enough hours, they're probably likely to save a bit more because their uncertainty about casual work is obviously going to affect them. So that could be a reason why savings rates are rising. I'd like to go into the second part of the question quickly.
Wow, it's a long one. Yeah.
But what businesses are going to do well, and where do you want to invest in a high inflationary period? So you've got the standard 5 or 6 sectors. So you go banks, gold, property trusts, and commodities. Now, I'll be very ambiguous, like Lindsay always is, and say it's very dependent and very specific to what type of inflation we have and other macroeconomic factors. So I won't make a comment and a prediction because we don't know what's coming and where inflation is going to be impacted the most. So I'll leave it at that, but definitely something to watch out for, but don't be concerned about it right now. Have it in the back of your mind.
Very good. Well, let's take a big jump right now over to the other side of the world, because I want to jump straight over to the ever stoic Gabe and have a quick chat about a boat a boat that's stuck in a canal over on the other side of the world and causing all sorts of strife and mischief.
Oh, indeed.
Give a talk a little bit about that.
Well, essentially, I mean, I'm not even sure how this happened, but overnight, a couple of days back, the ship, they've called it the Ever Given, although I'm looking at a picture of it now, it says Evergreen on the side.
Caroline's got the answer for that. Me and Caroline are discussing
Evergreen is actually the name of the corporation, but the name of that ship.
Evergreen, and they're an oil company, right? Is this an oil ship? Is this, this is an oil ship.
I was very confused because I thought it was very intuitive that you would put the name of the ship on the ship, but it's actually the name of the company on the side of the ship. In any case.
Oh, well, Maersk. You got Maersk. Maersk.
So in any event, whatever that is, the ship blocked the entirety of the Suez Canal, right? So they're trying to trudge it out with all these other small ships. There's a really good picture that Louis
it's
showed.
like a little digger.
I've actually got it up. I put it into
actually, we got that.
We got that up. Wow, look at that.
Like a really little digger, just like digging the sandbank out from underneath the ship.
And this is a huge ship. This ship is the size of the Eiffel Tower, 400 meters long.
It's massive.
And if you look at this
massive.
digger, it's just insane. I mean, I've done a lot of work on cruise ships before in the past life, and they are huge. Like, you think you understand how big these things are, and then you sit next to them and you're like, how does this thing float? It's so big. These are so big. And I've also been up and down the Suez and the Panama Canal quite a few times, and they're narrow. There's not much space in there. You'd be pretty worried if you're a wide ship like this one clearly is. And clearly it's gone wrong. What happened? Why did it do this?
Well, I mean, it could just be sandbanks, right? In the canal itself. I mean, if you look at the canal, you can see some different shading there. I mean, I imagine the driver or the captain didn't just accidentally steer it into the side of the canal.
That'd be embarrassing. They wouldn't release that one. Yeah, one of our commodities specialists mentioned this morning actually that they do have to do a lot of dredging along that canal, simply because it's an artificial man-made structure, so they have to keep maintaining it.
Essentially, well, I guess the major significance of this is that the Suez Canal is an incredibly strategically, and I guess in terms of supply chains, a very important laneway for ships to pass through in and out of the Mediterranean.
12%, I think, of global trade or something along that line.
It's a very significant figure, of course, and if you have a look at the way the oil prices reacted to that, you can see just the degree of significance this particular channel has on oil prices moving forward. So, oils was moving in a slightly negative direction. Had a bit of a reprieve because of this untimely event in the canal. But once this is cleared up, we'll see what happens.
Very good. And now, this is impacting oil, obviously. Now, why is it impacting oil? Because obviously the oil now has to be rerouted. Now, it has to get rerouted around the Horn of Africa, which is 6,000 1,000 kilometers, or it's a big chunk. And I think they estimated, our commodity expert estimated an extra 18 days tagged onto that, obviously give or take, but it's a significant amount when you consider that everything's down to the T, as you're no doubt aware with most travel, everything's down to the T. They have to add an extra 16 days. I think it's 12 days to get from Europe over to wherever it's going. An extra 16 days, you're doubling the length of the trip. That can just play havoc on supply and everything like that. And is that one of the reasons that we've got the oil kind of moving in a positive direction and up and down?
Yep. Yeah. Yeah, essentially. Yeah.
You look at the last 4 candlesticks of oil, it's like full-bodied red, green, not going anywhere. The price is pretty much staying the same, but you've got confluence factors. You've got the Suez Canal pushing the price up, but then you've got the poor COVID rollout in Europe and, less economic growth. They're pushing it down. So it's just balancing.
We might have to have a bit more of a chat about that in the next section. But for now, talking about boats. One of the things that KOSEC does a lot of is events, a lot of educational events, a lot of events for our clients, and a lot of events for new people that are interested in what's happening in the market. Most recently, we've done an event on one of the ships around Sydney Harbour. It was a great event. It was a great day. Thank you for everyone that came along to that. We're going to show you a quick video of what that looked like. So that was the last boat event that we did. It was a presentation. We obviously did it on Sydney Harbour. Beautiful day. We provided food, alcohol, and some entertainment in the form of a presentation on the stock market. I presented that, and we talked a little bit about what investing in the future looks like, what the investing landscape, similar to the type of things that we're discussing here today. We were all present, and we had a great time talking with various people. Now, one of the questions that we got is we had so much demand for that, we actually sold out of tickets quite quickly, and we got asked, are we going to put another one on? So this time we are going to put another one on, but we're going to do a bigger boat, we're going to do more food, we're going to do more alcohol, and we're going to do an even bigger and better presentation. Take a look at where we're going next time. So that's the next boat that we're going to be going on. That is Ghost 2. We're going to be going around Sydney Harbour again. It is going to be a fun-filled day. We've got 3 hours out on the sea. Obviously, all food, all alcohol will be provided, and we will once again be doing a presentation. Now, if you're interested in joining us, tickets are limited, so please email through info@kosec.com.au. It is not going to be something you're going to want to miss. Let's now move over to currencies and commodities, all things that shine, sparkle, fold, and make the world go round. Okay, We're only going to talk about two things here today, gents and lady. Okay, the first thing we're going to jump straight into is over to Mr. Mossman. Have a chat to us about gold, because that ties in quite nicely with inflation. The traditional inflation hedge. Let's have a chat. What's it been doing? How are we looking? What do you think?
Yeah, so I did have a chat about inflation there, and I kind of painted a scary future that inflation's coming. But in the near term, it's not something that's being reflected in the price of gold. And it's, gold is rising and it's stabilized at the level it's currently at, but it's probably not going to be a huge impact near term. But I will state, however, gold miners, because you do have to separate miners from producers sometimes. And sometimes the price of a commodity could be going up and up and up, but a producer can be going down, 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 and vice versa. So last week on the podcast, we really gave a shout out to a lot of gold producers, and three in particular, actually. Newcrest, Evolution, and Northern Star. Northern Star was, I think you brought Northern Star, Gabe, was it? Now, this morning, in fact, we did get 3 institutional valuations for all 3 of those companies, which all have upside.
And first and foremost, those companies have done exceptionally well this week. What's Northern Star must be up nearly 10% since we mentioned it. I know Evolution Mining and Newcrest are also in positive territory. When you consider the market's gone up 1.5%, that's a very, very good return. Picking something at the bottom.
They've outperformed the market this week, those gold producers, and gold has either gone down a little bit or remained flat. I can't give you the exact figure. So it does go to show that you can pick businesses in a commodity space that go up despite what the commodity itself is doing. So Credit Suisse gave Newcrest Mining an outperform rating with 17% upside. Evolution was given an outperform rating with 5% upside, and Northern Star was given another outperform rating with 24% upside. And
Northern Star, very clear
Gabe. So Gabe, you've probably got some insider knowledge at these major institutions, do you, buddy?
Don't answer that, mate. Don't answer that. Ever stoic, Gabe.
Decline for comment. But yeah, no, unbelievable. And I think gold miners have something that's been undervalued by the market in recent times, undervalued. And as we mentioned last week, you could be picking it up for a bit of a discount, which a lot of major institutions would agree with as well.
And I mean, the logic behind getting Northern Star as a pick, I mean, we were always joking about how the insider trading, all that stuff. I mean, obviously that's not true. You can't for a big company like that. But it was very logical why we picked that. For starters, it was the one that was the heaviest beaten down. It was on a 2-year low. It had the most encouraging broker calls, and it was fresh off a merger of equals with Saracen. So we obviously bought it, and that's the one that we've been buying for a lot of our clients, and it's certainly moved into a positive direction. Let's jump straight over to Mr. Ryan there. Have a chat to us about sort of the other side, which is oil, because I know we spoke a little bit about the ups and down, the traffic light that we're sort of seeing in oil at the moment. Have a look. What is your take on that?
Well, let's pull up the chart here just for the viewer sake so they can see where it's going. So, oil had a really massive run, right? So from the beginning of November, it went up around 88, 89%. I think that's WTI. I imagine Brent to be around the same. So, a lot of that's driven by positivity with the vaccine. Even despite, Joe Biden entering as president of the US, oil still moved in a really positive direction as well, which was a little bit, there was a little bit more uncertainty in regards to his policies with oil, but still did really well. Then we have the situation now in Europe where there's lockdowns, as Louis pointing out, coming through in some of the major economies, concerns about variants of COVID, things of that nature. So oil's had a bit of a pullback, maybe to be expected, considering that a lot of that is driven by potentially future demand expectations as opposed to what's really occurring in the real world at this stage. Even despite the OPEC cuts that we saw a little while ago as well, what's really bolstering it at this stage is that Suez Canal situation.
Yeah, of course. And that's creating the volatility, which, of course, it's a dream for traders. I mean, if we were going up 5% one day, down 5% the next day, up 5%, I mean, all over the place, really.
Exactly, yeah. So there's a lot of volatility in the market. There's a lot of opportunities there, I guess, if you're going to be swinging oil. But yeah, certainly that's what's driving the vector, or the vector that's driving the price of oil at this stage.
Very good. Right, let's go over to Caroline, because I know you've had your BDI on ore. Recently, again, that joke is just, I'm just going to keep saying that joke until...
I'm just not going to respond.
Just going to, everyone's just
beat us
gonna,
into submission.
Yeah, I'm just going to beat you into submission until eventually everyone laughs at my joke, at the joke, not at me. Let's go straight over to iron ore. How are we doing with that? I think that's quite range bound at the moment, yes?
Yeah, not too good. So as of this morning, we're down 1% to $159. We can look at the chart that our producer has. So we're not too good, starting to peter off. So the production cuts in China, they have weighed on prices, but there is an argument to be made. So because as China pushes hard towards renewable energy, so small iron ore players who emit a lot of carbon, they will not stand to benefit. So in this case, people will have a higher demand for higher grade iron ore, in which case Australian iron ore will benefit. Iron ore miners will benefit. But more recently, like 2 days ago, preliminary trade figures were released. So exports were up 2%, that's good. However, our top export product, that's iron ore, was actually down 12%. So that's quite a massive drop.
It's interesting because Fortescue Metal, which is, one of our favoured iron ore producers, that had a phenomenal run-up. It was obviously one of the things we picked a lot on the podcast. I think it's up about 4% today. Okay, very, very low. It's had a big drop off, I think around 20% or so, in line with iron ore. Is this now a support level, or do we think it could potentially break down? Mr. Ryan, you look at charts a lot.
Oh, yes.
Are you concerned about something that's bounced off that 200? Do you think there might be another down leg?
Well, no, it's another commodity which has had a really massive run. And if you look at all the industrial metals, iron ore, copper, nickel, I suppose cobalt as well, all these metals have had a really massive run up in, let's just say the past 8 months. Yeah. All done really well. We have this macro catalyst with the Chinese steel making or pollution cuts in Tangshan, or I think that's the name of the city. And, moving forward, there's some concerns regarding demand from China.
Urge a bit of caution.
Yeah, maybe a little bit of caution with metal. I mean, the prices of metals could potentially be a little bit overextended depending on what you're looking at. Then you have Brazil coming online. All these things in confluence don't really bode well for us as one of the leading producers.
Might need to pick another commodity to talk about, Caroline. I think you might have done your dash on that one through there. All right, ladies and gentlemen, I'd just like to have a quick chat now. Obviously, that was our currencies and commodities. We got a message today that our show, KOSEC Show, which has been around about 4 months or so right now, has actually gone straight to the top charts, actually in the top 55 finance podcasts in Australia right now. It was actually announced. Now, if you want to check out what other shows are on there, okay, including our own, then you can go to the link that's in the description on the show, and I think that might even be somewhere around here as well, but feel free to jump on there and have a look at what other finance shows are out there as well, including our own, so very, very good. And on top of that, I think everything's sort of been really, really moving in a positive direction. Once again, if you do have any questions or anything that you want to hear about in the show, if you have any video questions or anything you want us to really talk about, please let us know. More than happy to answer any questions you have. We're going to take a quick break now, and we'll be back with our sector performance. Don't go anywhere.
The world changed this year. So did the stock market. Is it time for a change in your portfolio? Invest with confidence. Invest with a solid strategy. Invest with KOSEC, KODARI Securities.
RBA has cut interest rates to a record low of 0.1%. Returns in saving accounts are now shockingly low. We have never seen these conditions before. The good news is that the stock market benefits from low interest rates and historically has outperformed property or any other asset class. KOSEC uses a unique stock market filtering system called Lotus Blue, which helps generate solid profits for clients. During COVID in April 2020, KOSEC recommended Kogan, which went up 340%. In June, KOSEC recommended Saracen Minerals, which went up 23%. In October, KOSEC recommended Nickel Mines, which went up 33%. If you want your money working overtime, you need to know what stocks to buy and when to sell. That's where KOSEC can help. With no barriers to entry, it's just simple investing. Build wealth with a concrete investment strategy. Go to kosec.com.au. Get a free 7-day access to Lotus Blue and receive our top 8 stock picks today.
Throughout time, humans have relied upon innovation to advance and evolve, using new and improved methods, having meaningful impact on society and industries. In order to advance, ideas were transformed into new products and services. The stock market has also evolved through innovation. Innovation has been key to KOSEC's success. Using artificial intelligence and machine learning, KOSEC has streamlined processes to bring better opportunities to clients. Opportunities that might have otherwise been missed. Join a company that innovates to bring clients the best opportunities and service. Invest with a solid strategy. Invest with confidence. Invest with KOSEC. KODARI Securities.
Welcome back. Let's move on to our next section now and have a look at what the best and worst performers for the week were. Caroline, straight over to you. Have a chat to us about your lovely chart.
Yep, we will jump straight into our lovely chat. So our best performing sector this week was healthcare, up 4.6%. So a lot of the heavy lifting was done by CSL, up more than about 4% this week. So might be because their locally manufactured vaccines are out.
I feel like that was a stock that we picked relatively recently.
The next one is one of the stock that you picked as well. Sonic Healthcare.
That was definitely a stock that we picked on this podcast.
That was up about 9% this week. I think they might be benefiting from a lot of COVID testing in Europe and US. Another top performing sector is utilities, up 3.5% this week. AGL Energy has said that they will be constructing a large battery at its power station, given that there are limited margins in terms of coal. And finally, our worst performing sector, it's actually not bad, it's just down flat. IT, down 0.1%. So a lot of it was done by buy now, pay later players.
Afterpay is getting smoked.
It's actually not that bad. Like for this week, they're down 1%.
Yeah, but it's gone from 160 to 120. Like that's a big drop off for a stock like that. That's huge. Yeah.
I think Morgan Stanley downgraded it to a target price of $120, but
did they?
Yeah,
I know UBS has issued a target price on Afterpay Touch of $38 or something, and everyone else is sitting around the 150 triple digit.
Up at 160, that's a 75% drop off in share price. So it's pretty big call.
What do you guys think in terms of areas of value? You're thinking health tech might be ready for a rebound because that got absolutely hammered throughout all of 2020. Has anyone seen in the literature that there's this theory of thought that if a sector or a stock underperforms in 1 year, the next year they tend to do quite well? Is that an urban myth, or has anyone sort of seen that? Or
what literature does that derive from?
Well, I don't know. I'm just stimulating a bit of conversation here.
Look,
Louis,
a lot of those statistics can be pretty hard to actually prove when it comes to proving complete causality. In fact, but
healthcare didn't do very well last year.
It makes sense. It makes sense. I believe that when it's not a proven fact that if it goes down, it's definitely going to go up. But if it goes down, there's a lot of times you can pick things up in an area of value, much like we've done for tech 2 or 3 weeks ago in great businesses like Altium and Appen as well, which have done over 15% since we spoke about them on the podcast. So it doesn't mean everything's going to go up, but things that get sold off heavily, obviously you can pick them up for a discount when they get sold off irrationally. So that's the biggest difference, I suppose, to derive.
So this is what you guys think. This is what I think and everything. Do you want to see what they say on the street? Let's find out what they say on the street. Ladies and gentlemen, we're going to go to our next section now. Street Walks, Street Talks.
This is Street Walk, Street Talk. I'm in our beautiful city of Sydney, going around, seeing what people think about the stock market.
Quick question, just wondering, are you currently investing or interested in the stock market? And if so, do you have any tips for us?
No, I'm always interested in the stock market, always. And tips, I don't know. I just stick to the blue chip with dividends and tax breaks. That's what I'm looking for because I'm retired. I'm not looking for easy gains. Yeah.
Lucky you.
Yeah, I'm having a good time. Life's good for me.
Hold cash.
Hold cash? Any companies you would invest with that cash?
Any what?
Any companies you would invest with that cash?
AMP.
AMP?
Yeah. Few announcements to be made in the short term, so yeah, keep an eye out. And don't believe the rumours that you read in AFR. That's it. Yeah.
Are you working for AMP?
Yeah, we are. Yeah. So yeah, we work for AMP, all of us. So.
Well, you just got to be careful about. Well, I would say a bit of frugality is a little required, but also a bit of risk taking. So, again, when you talk about investments, are you talking about financial investments or just personal investment?
I guess whatever you're most interested in.
Well, in that case, it's always about taking a bit of risk, right? If you're going to go into something full on, head on focused, you need to put a little bit of risk in there and be able to take calculated risk to be able to make that decision. If you don't, you're never going to get the reward out of it. So if you take $1,000, you know you might lose those $1,000, but you might also gain another $1,000 from it.
Yeah.
So it's always a chance, but if you don't take it, you'll never find out.
Yeah.
So that's my motto in life. If you don't do it, you never know.
And what's the biggest return you've ever had?
Biggest risk?
Yeah.
Well, I could say I did shift, let's say 50% of my portfolio to a much more riskier investment, which kind of panned out pretty well. But of course, it was a long-term investment. So I always go for growth and value rather than just a fast buck.
Yeah.
So that's pretty much my view on things.
So you're not a trader, you're definitely an investor.
Yeah, I'm an investor. I'm not a trader. So, that's pretty much my way of going. So.
So that was Street Walks, Street Talks. All right, panel. What do we think? That was pretty interesting. I think the first guy that we spoke to, obviously quite a savvy investor. He's retired. He's looking for tax breaks and he's looking for the blue chippy ones. Obviously here at KOSEC, we don't give advice on tax. It's not something that we talk about a lot. However, I can let you know that our boat cruise is fully tax deductible, as is memberships with KOSEC. So there we go. So if you are interested in taking a bit of a tax break, please email us at info@kosec.com.au and fully tax deductible. But talk to us about blue chips, Mr. Mossman or Caroline.
I think a lot of investors, and especially people, as he mentioned, in retirement, are looking for that consistent income and stream of income to keep and support their lifestyle. The problem is with that, if you're looking completely on a portfolio designated to 100% dividend paying stocks, that you can run into a period of time like COVID-19 where your dividends are going to get hurt and that stream of income can be impacted significantly. And over time, it has been shown that a lot of the time growth companies do outperform a yield on dividend paying stocks. So it is important to diversify yourself as well. We can't give any sort of personal advice in that sense, but holding businesses that both have the potential to get capital gains and dividend yields.
One of the big things that we do a lot with clients that come across to us, maybe from self-managed superannuation funds or something like that, is they want to give a good mix of growth. They want to get growth, which is something that KOSEC does very well. We identify good growth stocks like the Northern Star, etc., that have all gone up, but they want to maintain their dividends. So we actually select the top dividend-paying stocks, the ones that are looking the best. All sort of going, we sort of operate this sort of core satellites approach where we have a core of dividend paying, then we have this growth on top of that. Do you think that's sort of a wise thing for a person, maybe to tweak things? What do you think, Gabe?
Yeah, I mean, it's always good to have a look at different options for yourself. I mean, the only, I think, issue really with dividend paying stocks is that while they may have higher dividend yields, as Louis pointed out, in growth propositions, you might get better capital return. And not only that, but if you're holding a stock that pays dividends, you're also subject to the fluctuations in the price of the particular company, right? So while it may pay a good dividend, the actual value of the position may not be worth the risk of hanging on to it for so long.
But this whole idea of blue chips, and I think there is going to be a movement away from the traditional blue chips like the Wesfarmers and CSL and all that kind of stuff, and more into these sort of the new round of blue chips, which are going to be the ones that have got growth in them, but they're also relatively stable, well situated with the ASX 200, and moving in a positive direction. Yeah. What was one of the? Yeah. Does that sort of make sense?
Of course.
Yeah, absolutely.
Makes a lot of sense.
One of the other things we got asked about was it lithium? Did we speak about lithium?
I think that was mentioned. Yeah.
What do we think about lithium, Caroline?
Good space, like what we heard last week about uranium. I think we were in it last year, like the start of last year, January.
Yeah, it was one of our big positions we took.
Yeah, we a lot of money, like earn a lot of very fast moving stocks. It very high growth as well. I think the one we got into was Aracabra. We have the chart for it as well. Sticker code ORE.
Have we got that bringing up on the screen? Yeah. Wow, that's done very well.
That steep hike up there was when we were in it.
Yeah.
And another one that we were in was Galaxy Resources, ticker code GXY.
Galaxy, so both in the lithium space. I think it's interesting about lithium companies. Both of these companies actually don't make money.
Yeah, the financials are very, very...
Very, very poor. Obviously, it's a bit of a buzz thing that's going on. So that's an area where we could see some potential growth. One of the people we spoke to, or one of the people that our producers spoke to, spoke about cash, holding cash at the moment. Thoughts on that, Louis, Gabe, holding cash?
What's my return on my savings account? That would scare me if it was just sitting in cash completely.
Yeah.
I mean, cash, it's very safe. People feel very secure holding cash. But we mention this all the time, that the most sophisticated and wealthy people in Australia and across the world do invest their money, whether it's in any asset class. Obviously, we're specialising in the stock market, but holding your money completely in cash, it's not going to go anywhere. And at the end of the day, your real returns are going to be almost negative if inflation picks up, because you're getting absolutely no return, and your money and your purchasing power of that money is going to go backwards.
Now, you said to me something interesting today. Now, obviously, full disclosure here, you are from Ireland, so you're very well equipped with your whiskey, but you said that whiskey is the highest returning...
Yes, of course.
What did you say to me?
It's the highest returning alternative asset class. So you know, people they might invest in very rare coins or postcard stamps, all those kind of weird and wacky artwork as well. Whiskey, especially Scotch whiskey bottles, have been the highest returning alternative asset class. So I know it's just
I invest heaps in whiskey every weekend. I'm going to jump on board with that one.
Yeah, I've got definitely, as another person in that segment mentioned, probably a little bit more risky whiskey. I mean, it's not that necessary.
Yeah.
Of course, risky whiskey, as Caroline pointed out, and that gentleman in particular, he did, discuss a lot about risk, and I think that's a point that should be something that all new investors consider. Over the past 12 months, COVID-19, of course, we have observed that so many new investors have entered the market, especially impacted by stimulus checks being given out to younger people.
Yeah, of course.
And they're investing for the first time. So yes, there are risks inherent in investing in the stock market, and everyone should know that going in there. But at the end of the day, you can marry up risk and return appropriately if you take an intelligent and sophisticated approach to making that investment. So
and to be fair with you, Mo, that's what a lot of clients use ourselves for, is working on keeping the risk nice and low. It's why we tend to focus more on the ASX 300 listed companies, keep that risk nice and low. A lot of people they want to be able to sleep at night.
Yeah, of course.
I think someone once said to me that's why they don't get involved in Bitcoin, is because they want to be able to sleep at night.
Yeah, of course.
Yeah, or wake up in the next morning and see that you're up 30%, one or the other. Let's chat to one of the gentlemen there, or let's talk about one of the gentlemen there spoke about, I think the guy talked about cash, but he also talked about AMP. Now, I, for one, was around 2017, 2018 on the Your Money channel and also Sky Business. There was a lot of, and AMP was getting absolutely thrashed. Is this a good company that maybe has just been a bit unfairly beaten down and maybe could be able to have a turnaround? I mean, obviously the gentleman there is obviously works for AMP. I, for one, applaud anyone that goes to vouch. I mean, it shows an enormous amount of loyalty that you can sit there and say, you know, there's good things to come. It's been a bit irrationally sold down.
Yeah, well, I think you mentioned a good point there about what you read in the AFR isn't always 100% true. And that's something that we also consider and discuss, that there's a lot of noise when investing in the stock market. A lot of our CEO is famous for saying you got to block out the noise.
Yeah, of course.
Because everyone's got an agenda sometimes when they're mentioning things, especially on AFR, Wall Street Journal. You've got to take everything with a grain of salt. And at the end of the day, make an informed investment decision based on your own analysis. So look, AMP Capital, they have been one of the largest companies in Australia for a very long time, recently of which, as he mentioned, they have had a lot of negative press. Their share price has been heavily beaten down, and admittedly, it's not a company that we're covering very extensively to be a turnaround story like a lot of those gold miners and beaten down tech stocks that we're speaking.
Absolutely. I think one of the things I always like to do is put people on the spot through there. So I'm going to put Gabe on the spot right now. If someone came up to you, if Tegan and Tim, the terrific Tim and the terrific Tegan, came up to you and said, "What's your hot pick?" What would it be?
It probably wouldn't be AMP.
If you had $1 million to invest in an asset class or one asset right now, what would it be?
One asset.
One asset. Yeah.
Well, I mean,
now obviously that is going entirely against the. No, let's say one sector. Let's talk about a sector because this is the section on the sectors.
Yeah.
Okay. So which sector would you go into?
I mean, this is a very multifaceted question. I mean, so many considerations. I mean, $1 million, probably, maybe some of the IT companies and certain IT companies as well.
So you reckon tech because of the beaten down story?
I'm not talking about the buy now pay laters, but you know, maybe some.
Is that tech or is that now fintech? Like,
it's IT. You know, it's you know, put underneath the umbrella of IT. But yeah, I think some of the beaten down tech players, yeah.
Yeah, so there's some of the beaten down specifically.
Altium app and I think those
maybe
are
Data3.
Yeah, Data3. Data3 is one as well. Maybe even TNE. That's not as beaten down.
That's not as beaten down. That's actually had a bit of a run.
That's one. I mean, that's a company which is amazingly consistent financials.
Telstra.
Maybe Telstra as well.
Maybe some of those.
If you want to get in some of that blue chips we were discussing, I mean, Telstra could be one which you would consider as well.
Yeah, and obviously in terms of sectors, healthcare sector is one that's sort of starting to have a big turnaround. Those gold miners are starting to look very, very good.
Yep.
Talk to me about retail. Caroline, talk to me about the retail space. Is it sort of done and dusted? Are we sort of away from all of that? Because Kogan's really having a rough time of it. So's, I don't know. Obviously, I think JB Hi-Fi is on an all-time high.
Correct.
But apart from that, it's been a bit muted.
Correct.
In terms of.
I think if you just talk about Kogan, if you just put Kogan's competitor beside it, Temple & Webster, Temple & Webster has performed much better than what Kogan is doing.
So. Not last year though. Kogan did very, very well last year.
Yeah, but at its current point in time, I think Kogan's relatively lackluster performance.
Yeah. Well, they haven't bottomed out as per se. It's going to be the start of an amazing turnaround, but they're definitely, I think, a great business. And moving forward, I can't guarantee anything, but I think moving forward, they will be a very strong company for many, many years.
How can they not be? When you think about it logically, if we take it right back to the whole Warren Buffett, have they got a good product, kind of bare bones, top down, like proper.
I put that Kogan straight in there.
Yeah, because what do? They take normal products and they make them cheaper by white labeling them. They do. I mean, who doesn't want that?
Yeah.
I mean,
and
everyone.
E-commerce as well. It's a trend that's only developing year on year.
So you can go to a store and buy a TV, or you can buy it on Kogan for cheaper. Seems pretty logical to me as we kind of go in there and stuff like that. But I think there could be more selling to go between now and then. All right. That's the best and worst on the ASX this week. Now, do you have a stock that you've been watching for a while? Is it time to buy, sell, or maybe average in? Why not send us a message and we can ask our panel. In the meantime, we're going to take a short break and we'll be back with our final section of the show.
How do you get the highest returns in the stock market on a consistent basis? Obsessed with this idea, Michael KODARI forms KOSEC, KODARI Securities. He seeks, in his own words, a revolutionary investment strategy based on better information and knowledge. Wealth begins with better knowledge, becomes his motto. He seeks to identify and accurately pick the next top-performing stocks on the ASX. He seeks for consistency. Michael KODARI creates a unique stock market filtering system he names Lotus Blue, named after a flower that blooms just once. Because in investing, timing is everything. See how accurate KOSEC stock picks are. Get a free 7-day access to Lotus Blue today. If you want the KOSEC investment edge, you know what you have to do. Call KOSEC now or visit kosec.com.au and take advantage of the insights he reserves for his clients.
Trust is key to any relationship. Fortunately, it's nothing that can be bought. It's earned. As an investor working with an organisation, they need to demonstrate integrity. They must show consistency, full transparency, accountability. They must be genuine in their approach. Their core values must align with yours. They need to put your interest first. If you are considering investing, work with an organisation that earns and nurtures trust. Work with an organisation you believe in. Work with an organisation that treats you the same way they like to be treated. Join an organisation that views clients as people, not people as clients. If you are considering investing, consider KOSEC KODARI Securities.
As kids, we were active. We were creative. We questioned all things. We celebrated everything. We took risks. We had no limits. We had dreams. Our imagination helped us solve problems and create new possibilities. Albert Einstein once said, "Imagination is everything. It is the preview of life's coming attractions." We are in an ever-changing world filled with fear and uncertainty. Don't let that change the inner child within. As Walt Disney said, imagination has no age and dreams are forever. KOSEC is here to help build your dreams and create possibilities. Secure your success with KOSEC KODARI Securities.
Welcome back. Now, the moment we've all been waiting for, the final section of the KOSEC Show. So this is what investors are really looking for. We know what oil, gold, and the dollar's done this week. We know what the top performers for the week were. Now let's find out what our panel is looking at for the week to come. And we're going to go straight over to the ever mystic Mr. Louis Mossman. What are you looking at this week, and why do you like it so much for the week to come?
Of course. So in a theme of, I suppose, picking a lot of businesses that have been heavily beaten down, I've got another one coming at you, Magellan Financial. Now, they're a diversified investment firm that have a range of different funds operating across the world in a variety of different markets, sectors, and businesses. So they're headed by Hamish Douglas, and he's, I suppose, one of the wealthiest men in Australia. I believe
he's in the top. He's 220. He's in the top 220.
220. I thought he was a bit higher than that.
Oh yeah. He's in the top 220.
Yeah.
I think he's probably the 50, but I know I was reading the 220.
Yeah, of course. So I think they've been identified most definitely as one of the top performing investment firms in Australia over the last 10 to 15 years. And their share price has been heavily beaten down over the last 3 months. And they
44% down from all-time highs.
I think you might have it there exactly, Will. And of course, I do believe they've found some sort of level of support. So again, a lot of these businesses have been beaten down, heavily sold off, and there might be, I suppose, a chance that they are undervalued. Now, I do share that opinion with a lot of other players in the market. So a lot of major institutions do show a lot of love for Magellan. Morgans give it 26% upside with an ad rating. Citi, 22%, and as well, Ord Minnett, 12.5. So again, another business like Appen I mentioned last week, you could be picking up for a bit of a discount. That has got a very strong track record, is loved by the market, and as well could do quite well moving forward, probably in the medium term.
Yeah. Is there any credence to the idea that it is a financial company? Obviously, it is a competitor in some respect to Morgan Stanley and Morgans, etc. Is there any credence to the fact that it's actually been upgraded by its competitors? Does that say a lot about the business, or is that just all urban myth?
At the end of the day, I think investment firms have a pretty
stringent way.
If they're investing in that business, then they see it as an investment, not a competitor. So at the end of the day, Commonwealth Bank, they're not investing in Westpac, but it's an investment at the end of the day. It doesn't matter if they're competitive. If they can get a return out of investing in it, I'm sure they don't really like it.
Did we have a chart of Magellan?
I believe we do have a chart of Magellan there. As you can see, it has found a sort of level of support and
is that a fib? Is that a fib retracement level that it's on right now? We're seeing a bit of a movement.
I don't believe it's on the chart there, but it has, I think, bounced off a significant fib level, and it has made a higher low as well, and it's continuing high. So again, a business I think that can do very well in the medium to long term, and a company to keep a close eye for.
Very good. All right, let's jump over to Mr. Ryan. What are you looking at, and why do you like it so much for the week to come?
Well, say that I'm FOMOing into healthcare, but I like the look of Fisher & Paykel. That's FPH for all you people who want to look it up on your own. Now their big offering is, of course, the treatment of sleep apnea.
So it's not the it's a New Zealand company, but it's not the white goods. So it's not the white goods like the fridges and stuff like that.
It's the healthcare.
It's the
healthcare devices. So this may be a little bit more of a macro player, but naturally, sleep apnea is a condition which affects a lot of people, and mainly people that have very thick necks or people that are morbidly obese, right? And globally, this is a trend which is on the up.
Suddenly got very self-conscious about my neck.
No. Yeah. I mean, I know a lot of martial artists have very serious issues with sleep apnea because
of it.
Is that right? Because they train their necks a lot to avoid getting choked and stuff. And it can actually result in breathing issues long term. So not just for obese people, but also for those who are gifted with thick necks or cursed with thick necks, depending on your perspective. But, long term, obesity rates are skyrocketing, especially in the Western world. And a lot of consumer demand for these products are in the Western world as well. Moving forward, we're coming out of COVID. Maybe hospitals are a little bit more cashed up to be investing in these things. People, again, as Louis pointed out, we're a little bit more stimmied up. We have more cash, potentially able to spend a little bit more on these types of products. And I think it's something that can take advantage of these broader trends. And FPH, situated within the market, could do quite well.
Yeah, we've got a chart for that one there as well.
Yeah, we've got the chart there as well. So, you can see it's a little bit range bound. You might even say a little bit lower. It's a bit off the all-time high. I think it's roughly 15, 16% to get to the top there. But then again, moving forward with those broader trends, I think this is a company which can really take advantage of what's happening globally.
So you're saying that stock might be starting to wake up a little bit.
You could say that. Yeah, you could say that.
Yeah, absolutely. So you could say obesity's on the rise, and so is Fisher & Paykel. that's that.
I mean,
good.
yeah, potentially.
No,
Yeah.
am I getting worse? I might get worse. Let's
So
just
today depends on how you started.
yeah,
Compared to where you started,
it's an off day.
definitely
It's an
getting
off
better.
day. Let's jump straight over to Caroline. Let's redeem me. What have we got, Caroline?
I don't think you can redeem yourself.
Bit hard.
So this is one we've brought before. It's Data3 Limited, ticker code DTL. It's an IT services and solutions provider. So some of the solutions they provide include cloud connectivity and security. So macroeconomically speaking, it makes sense for Data3 to benefit because people are shifting towards working from home. And so companies would therefore resort to cloud-based platform to ensure that their operations run smoothly. Data3 is also the largest Australian reseller of Microsoft computers. So there's a reasonable assumption to be made that people will continue using computers.
Oh, very good. Okay.
Yeah, so financials, very financially stable, sales, earnings, operating margin increasing for the past 3 years. I think that the charts are what make it look really, really attractive. It's been on a downward trend since November 2020, hit a 9th-month low, bounce back, looking to consolidate and trying to rebound. So it's 21% to the next high and then 42% to its all-time high. So a lot of growth potential.
Wow, you've got a lot of data on that one. And those are all three very good stock picks. So you did that. You got a lot of data on that one, and they're all data three. Don't worry. Yeah, all right. Very good. Ladies and gentlemen, on that happy note, thank you very much for tuning in this week. On behalf of everyone here at the show, I want to wish our clients, friends, and colleagues a safe and happy weekend. And we look forward to seeing you on the next episode of the KOSEC Show. My name is Will Brownlee, and we'll talk to you soon. Bye for now.